Moving on to the sunshine scalping strategy. This is what we use to trade. The sunshine structure. This is it. When I start from now, online community, if you have a question, you can ask. Okay, if you have a question here so far, you can ask. So I want to move into the checklist now. Checklist are the ingredients. You need the ingredients to trade. We want to move to the ingredients. I've explained what you see on your charts and their uses. I need to show you how to use them, or the knowledge will be incomplete. Questions? So I take it you understand everything. Okay, you have a question? Okay. Yes. This one. Yes, it's also here. Yes. Is there? Is here? Is here? Is here? Now look at it. Look at the current place where price is. What is this? That's a sunshine. This is now inspiring a sell for you. That's why I'm going to explain the strategy for you. This is inspiring a sell. This is saying, okay, I think I'm getting ready to sell. Don't worry, when we move forward, you understand. So sunshine will appear as long as your chart keeps moving. This one that is appearing now is telling you, okay, I presume the market would sell. That's just one part of the ingredient. Sunshine does not appear if the market is not interested in changing direction. You understand? So if the market is not interested in changing direction, your sunshine will not appear. Now let me move to the... So if you see this, sunshine appeared here, the market sold. Sunshine appeared here, the market did what? It bought. Sunshine appeared here, the market did what? Sold. Sunshine appeared here, the market bought. Appeared here, the market sold. And then the market bought until when? Here. Sold a little, it appeared again, and now it's buying, and now it's appearing again. But this is just one part of the ingredient. You do only this, you will not be profitable. That's why we are mixing everything to ensure that the trade becomes high probability. I don't know if you understand what I'm saying. Any other question? Do you understand so far? You are still confused? Don't worry. We'll move forward, you get it. Yes, ask your question. Oh, okay. You need to, there's a video we did. If it's Forex you are interested in trading, you need to start from getting registered with a broker. A broker is the person that provides this platform, provides the liquidity. Is the person you give your money to and say, open trades for me, close trades for me. There's a video on that. You know your email is not with us yet. So don't worry, your email is down. We'll send you a video. You need to get started with a broker and open a demo account, an MT4 account. So how to now deposit live and to get started with trading will be explained to you by the end of the session. So don't worry about that. How to put your money and how to start trading will be explained to you by the end of the session. My job is to ensure that you know what you are doing when you now put your live money in the account. Can I proceed? Okay.
Does this setup also work for other pairs?
It works for pairs it works for any pair. It works for pairs mostly that move during session. Every pair has its own session when they move. And I'll be teaching that also. It works for GBP USD, Euro USD, USD Swiss, USD ZAR, exotic pair. It works for every other pair as far as you pay attention to the checklist. You understand? It works for gold too. Yes. Yes, sir. When a market is oversold, we have sold it and sold it. We are not interested in selling it, oversold. What else do you want to do? You want to be a buyer. You want to buy low. The market is oversold. You want to be a buyer. That's what it means. Yes. based off of the trading indicator. The trading indicator is saying, okay, I think it's cheaper now, or it's preferable to buy from here. But listen again, listen very carefully. This is not all you need. We are combining the ingredients together. I'm only explaining what stochastic is. The market is overbought. We are interested in buying from we're interested in buying from oversold level. This is oversold, it sells down. We're interested in buying from oversold level. When the stochastic is now oversold, stochastic is now oversold, we're interested in selling from oversold levels. But again, when we combine the ingredient, it will now make sense, because using this alone, look at this. If you had been selling here, yes, you would have made money. But if you had been selling here, you would have lost. Do you see it? Because selling, you're telling the market to go down. Buying, you're telling the market to go up. Selling here, you would have lost. So that's why we combine it. We are combining all these indicators, all these ingredients, to give us a high probability setup. Understood? Understood? For the stochastic helps identify overbought and oversold levels in price. The first question says, I should explain the stochastic indicator again. It helps identify overbought and oversold levels in price. When the market is trending, say an uptrend, the market is on an uptrend, we want to be interested in buying when the market is oversold. We will ignore the overbought levels or pay attention to them when they are diverging. I will explain what that is. But we are interested more in buying when stochastic is oversold in an uptrend. When the market is in a downtrend, we are interested in selling when the market is overbought using the stochastic indicator. So stochastic helps us identify overbought and oversold levels. That is what this is. So we buy at oversold, we sell at overbought. The second question says that the sunshine repaint. Now let me answer this. Most custom indicators repaint. What does it mean to repaint? The market, the indicator can appear here and the market will move higher. The indicator will move higher with the market. That is why I kept emphasizing you will not look at the sunshine alone and trade, because it repaints. It is the combination of the rest of the things I'll be showing you in the session that will now make you confident and say, oh yes, I've seen this, I've seen this, I've seen this. Tick 1, tick 2, tick 3, tick 4, tick 5. Then I take the trade. But using only sunshine that appears when the market moves higher, like now, when we were talking, the sunshine was here, the market moved higher and it moved higher. Who observed? You observed it too. Good. Who else observed it? I expected you to observe it also, because the market moves higher, it moves higher. So if you had jumped into yourself, by now you would have been suffering through these losses, even if it doesn't hit your stop loss before it turns down. So you have to pay attention to everything I'll be teaching you. Should we continue? Should we continue? Yes. Okay. So any question? Any other question? All right. So the sunshine scalping entry techniques. We will use two time frames. The first time frame is the 15 minutes time frame. The second time frame is the 1 minute time frame. And the 1 minute time frame is the time frame we enter on. We'll be using two time frames. If you notice, the first point there says, determine if the market is trending or ranging using the moving average on the M15, the 15 minutes time frame. If you are completely new to the trading world, you might not even know what time frames are. That is why we've done a lot of beginner videos on our YouTube channel. If you're here, you're not subscribed to our YouTube channel, and you do not know what I'm saying, subscribe, watch the videos, learn what I'm saying. But time frames are relatively easy to identify. We are using the 15 minutes time frame and the 1 minute time frame to trade. The 15 minutes time frame inspires our trend. Is the market trending? Is the market ranging? The second point says, for sells. Let me show you what that looks like first of all. I'm going to close a lot of tabs. I will tile this side by side. I'm going to quickly turn this to templates, sunshine. Good. So this is, I will make this 15 minutes. I will make this 1 minute. Good. Now look at this. This is one of most of the things that we should. Remember when I was explaining Fibonacci pivot as this acting as ceiling, resistance. Your sunshine appeared here, but it didn't start to give any significant turn until price gets to this. This is also another confluence. It's just one of it. So when we explain how to use them in synergy together, that's when the strategy itself will begin to make sense and yield for you. Now, we use on the 15 minutes time frame to identify the trend. How do we identify the trend? Let me go back to the slide. Look at this. It says for cells. When we want to identify the trend, for cell setups on the 15 minutes time frame, you want to see the 50 MA moving average below the 100 MA moving average and the 100 below the 200, and the moving averages should be what? Spread apart with what? Sloping downwards. Then what does that mean? It's a sell trend. It's a sell trend. When the moving averages are moving down and they are spread apart. Let me see if I can find a quick example. Good. Look at this. Pay attention to this completely. I wish I could make this bold for you to see. Anyway, look at this slide. Look how they spread. Do you understand what I'm saying? Where is the 50? Here. Let me use the cursor so that the online community too will get what I'm saying. The 50 is here. The 100 is here. This is the 200. Now, on the 1 minute time frame, because some people can be impatient and might not want to look at the 15 minutes time frame, you want price to be below the 400 moving averages, because the 400 moving average is also on your chart. That is why I use this. This is the 400 moving average. When price is below the 400 moving average on the 1 minute, it's a downtrend. When price is below the 50, the 100, and the 200 on the 15 minutes, it's a downtrend. So let's identify the trend. Assuming we were here in price, look at this region. Look at this. From here, what trend is this? So I'm helping you to filter the trend. You might not need price, especially if you're a beginner. Start identifying higher highs, higher lows, break of structure. You might not really understand that from the start. Maybe when you move forward in your trading journey, yes. But to identify this clearly, look at the 15 minutes time frame. The price is sloping down. The moving average is sloping down. They are spread apart. Imagine you didn't see all this part, or at least you were here. You know that currently, when the market was here, before the next open of the day, this is a what? Is a downtrend. We are now interested in selling. Who does not understand? Online community asks a question. Yes. What? I should go through it again. Okay. When the price, there are 4 moving averages on your screen. 4 moving averages. For the 15 minutes time frame, we pay attention to 3. The 50, the 100, and the 200. The settings are there. These are the indicators that are set on this chart. These are the indicators that are here. So the 50, the 100, the 200 moving average, when we see price below them, on the 15 minutes time frame, we are in a downtrend. Do you understand? For a buy trend, when we see price, look at this. Price is above the 50, above the 100, above the 200. Before we got here, we are in a what? an uptrend. So when price now came here, and price is now under the moving average, the 50 under the 100, the 100 under the 200, we are now in a downtrend. So what are we interested in doing when we are in an uptrend? We are looking for buys. What are we interested in doing when we are in a downtrend? We are looking for sells. But we will now go to the 1 minute time frame to look for those entries. We do not enter here. We enter there. Do you understand? All entries are taken on the 1 minute time frames. You can set your colors. Someone is asking the 100, the 50. How do you identify the moving averages and their price? Now, it's because you are new to the trading world, but if you want to identify them, the higher their figures or their value, the longer it takes for them to respond, because they need to gather. What does this mean? Moving average is trying to say, take the average of the last price candles. It will take an average of it. So the higher their price, the higher it takes for them to respond. Look at this. The closest one to price is the 50 moving average. The next one is the 100, and the next one is the 200. The higher their price, the higher it takes for them to respond to change. The higher their value, sorry. The higher it takes, the longer it takes for them to respond to change. So the 50 responds quicker, is closer to price. The 100 takes its time. The 200 takes more time to respond. Do you understand? So this, if you even put your cursor around it, what does it say? Good. What does this say? I hope the online community can hear me. So as I was saying, you can attend trainings and you need to learn to practice yourself. So that's why I'm emphasizing who has it, who is moving forward. Now let's proceed. So this is how we identify the trend. And now I showed you clearly on the chart how this is an uptrend and how this is a downtrend. Because price moved up, the moving averages are sloping upwards and they are spread apart. The 50 being higher than the 100, 100 being higher than the 200, and spread apart is how you tell an uptrend. And then for the downtrend, the 50 being below, the 100 being below, the 200 being above them all, and price being below is a downtrend. We can identify that trend. Now we move to the 1 minute. And the 1 minute is here. To identify a trend, look at this is the 400 moving average. Let me move my cursor on it. You see, it takes longer. It takes longer to respond to price. And see how price was sloping. Let me zoom out. 4,000, sorry, I said 400. 4,000 moving average on the 1 minute. Now, why is this so? Because some people would not like going to the 15 minutes to go and identify the trend, but you should. Now, the 4,000 moving average, when price is below it, we are interested in sell setups. So when our sunshine appears above, when our sunshine appears below, we are not interested in buying. These are the things that help filter your trade. So when you say, I'm seeing sunshine appear everywhere, are you with the trend? If the sunshine is appearing when you are against the trend, you are not interested in that trade. I'm giving you high probability setups. Sure, the price will move up. Sure, the price could move up. But if it is not with your trend, ignore the setups. So in a downtrend, on the 1 minute, ignore the sunshine that tells you to buy. In an uptrend, on the 1 minute, ignore the sunshine that tells you to sell. So when price is below the 4,000 moving averages, on the 4,000 moving average, on the 1 minute time frame, when the sunshine appears here, I am not interested. Even if the market goes up, that's the market. I'm interested when the sunshine appears here, above. Now I want to sell. Now that's just one of the ingredients. So moving forward to the slide, Good. Next step, so far we understand. Online community, so far we understand. Next step. The checklist on the 1 minute. This is what gives your entry. It says wait for sunshine to appear where? Where? Above price, not below. You wait for it to appear above price. We are now in a downtrend. We've confirmed from the M15 how, when we looked at the moving averages, they were sloping down and spreading apart, and then price was below it. And then we went to the 1 minute. We now saw that price is also below the 4,000 moving average. Then we are now interested in selling. So what now says sell? We wait for sunshine to appear above price. Currently above price. Then what next? We now wait for price to what? Why is my screen here? We wait for price to cross the 100 moving average. Notice we didn't mention the rest for now. We mentioned that price should cross the 100 moving average. Where? Downwards, not upwards. What makes traders lose is inability to have a checklist and to follow it. This is your checklist. This gives you high probability setup. This is what you want to see. So when you do not see them, what do? I wait. The market is always moving. 24/5, which means for 5 days, 24 hours, the market is always moving. If you do not pay attention to your checklist and you jump into a trade, you will lose. Moving forward, you wait for price to cross the 100 moving average, sloping downwards. Then you wait for the TMA band to cross the 100 moving average downwards. And then when do you enter? I want to hear it. I want to hear it so that you don't go and do something else after you move from this place. Why is my screen? Enter. There's only one person that is in the class. Let's all read this last line. That's your entry. There's a reason I'm asking you to say it. So that when you place a trade and you ask yourself, did I enter when price is coming from overbought region when I'm looking to sell?